All right, so this is the fun part. So we're going to be putting everything together, okay? All the concepts that we need, we're going to be putting it together. So, number one, okay, write this down. Higher time and fair value gap, block reaction. Okay, higher time for value gap, order block reaction. Okay, number two, there should be a liquidity sweep. Okay, should be a liquidity sweep. Internal, some sort of internal liquidity sweep or external. Okay, number three, you want to have a V-shaped reaction with inverse for value gap. Okay, you want to have a V-shaped reaction with an inverse for value gap. Number four, change in the state of delivery. Okay, that's our checklist, guys. Higher time frame for value gap, reaction, or an order block. You want to have some sort of liquidity sweep before tapping into the higher time frame for value gap or the order block. Liquidity sweep before tapping into this order block. You see that? And then you want to have some sort of V-shaped reaction recovery after that liquidity sweep, right? V-shaped reaction recovery, right? Price sweeps and then recovers above the liquidity sweep. Price takes out liquidity here and then recovers above the liquidity sweep. You want to have that. That's called a V-shaped reaction, guys. Remember that. And then in that V-shaped reaction, there should be a inverse for value gap. There should be an inversion for value gap in that V-shaped reaction, okay? Inversion for value gap. And then there should be a change in the state of delivery. So the last point before the high point, last point, liquidity sweep to the high point, and then if that last point right there that led to that high point gets taken down by a bearish candle in this case, okay, gets taken down by a bearish candle and then closes, that's our change in the state. Okay, that's our change in the state. So we actually enter here. We enter at the change in the state of delivery. Okay, we'll keep it simple because you can actually enter here at the retest of the inverse for value gap, but you're gonna miss more trades there. So you can enter here. I enter here. Okay, a lot of people's entry models enter here at the retest, but I personally enter here because you miss a lot of trades. You miss a lot of trades if you enter here. If you wait for that, you miss a lot of trades. Because, right, like I said, sometimes when price breaks CISD, it just does that. Right? It just does that. Happens. But most of the time, I noticed it retests the change in the state and then continues. Right? And then continues. So we also get, like I said, retest that, continues, retest this, continues, or it doesn't retest at all and just drops completely down and we miss a trade, and that's completely okay. We don't chase. Okay, this is our entry model. We wait for that retest in that CISD and then we enter the trade. Okay, we put a limit order. Okay, so open up your FX replay. Let's go ahead and break this down step by step on what I look for first and yeah, what I look for step by step. And yeah, let's just get to it. So first thing, you want to be trading within the kill zone. So you should have already set this point. You should have already set your go-tos, your time zones, right? I did make a video about it, setting up your FX replay, so make sure you go ahead and watch that. You get to set up your kill zones here, okay? Make sure it's in New York time. So New York time is for Asia session. New York time is 8 p.m. EST and 2 a.m. EST for London, and for New York it's 8 a.m. EST. But for Vancouver time, so Asia session is actually 5 p.m. EST, London session is 11 p.m. PST, and New York session is 5 a.m. right, 5 a.m. PST. Okay, so the practice that we're gonna do, we're gonna just go to New York session because that's where most of the volume and movement happens, right? We're gonna focus on during one to two trades per day. Okay, 1 to 2 trades per day when we're doing FX replay. Okay, so we're gonna go ahead and go New York session. Okay. Okay, we're at New York session. Okay. I also have this indicators, sessions high and lows on FX replays. These session highs and session low, guys, I haven't made a video about it. Guys, these are liquidity zones that price likes to target. I repeat, these are liquidity zones that price likes to target. Okay, I'm gonna put the money sign, right? Liquidity zones, you got London high, London low. It's basically just the session highs and lows. Asia high, Asia low, New York high, New York low. You can mark out your previous day high, previous day lows as well, but we'll do that later. But right now we'll just focus our entries and finding targets. Okay, so we're at 5 a.m. We are going to speed up our play here 8 times per second. We're going to do 5 seconds on the 1 minute chart. The first thing I look for, guys, some sort of V-shaped reaction. See, we're at 420 here, 420 V-shaped reaction. I'm not seeing much yet. V-shaped reaction right here. I'm not seeing much yet. So we're not even entering anything yet. Okay, we're just watching. We're watching. A lot of this, guys, is patience. You're just waiting for your setup to come to you. That's it. We're watching, okay? Oh, there you go. See that? We had some sort of liquidity sweep over here. So I'm interested, but I'm watching. I'm seeing a lot of movement. I'm interested, but I'm watching. I'm watching right now still. Still a lot of movement happening, right? A lot of movement happening. We're in a downtrend. There's lots of movement happening. Okay, I'm watching, guys. Let's keep playing. That's crazy. What's going on? Since we're going super down, guys, I'm actually curious. So I'm gonna look into the higher time frame to see what's actually going on and see where we're at. Okay, I see. See this massive red candle? And there's also news coming up here around 8 o'clock. High impact news. Is that CPI? It's a high impact news. Okay. Anyways, so look what price did. It took out Asia low, right? Session liquidity. It took that out, and look where we're at. Since we're in the higher time frame, we're on the 15-minute. Most of our time we're gonna be here, and look, what do we get? Fair value gap, right? We're on the fair value gap, higher time frame fair value gap, 15-minute fair value gap. So we could potentially have a setup here since we've tapped here, and it looks like we're about to tap this. We're about to sweep this liquidity. We'll see. We'll see if we actually sweep this liquidity. I don't know, but we'll see. It looks like price. That's what price is about to do. So we might have a solid setup here if price sweeps this external liquidity, sweeps Asia low and this external liquidity, and then we're inside the 15-minute fair value gap. We can get some sort of reaction, guys. So I'm watching. I'm interested now. I'm invested. I'm watching very close. Very close. Okay. I want you guys to notice what's going through my mind when I'm looking for these setups. Okay, we swept London. We swept this external low, and looks like we swept Asia low somewhere up here, right? From earlier, we swept Asia low. We swept that external low. So we already swept 2 liquidities, right? And I'm gonna look back into the higher time frame if there's any more reason for a price to go down. So it looks like we also took out, yeah, we took out Asia low because London low had been taken out. There's also New York low down here. That's a potential, that's the previous day low, previous day session low, which is really strong liquidity zone as well for a possible for price to go down to. But I don't see any fair value gaps here where price could potentially bounce off from, so I'm not interested. But there's also, guys, an order block here, so price can sweep this liquidity, fill this imbalance, tap into this 15-minute order block, right? There's a lot, I know, guys, there's a lot. You could tap into this 15-minute order block. Let me change the color so we're not getting it mixed up. Order block. Tapped into this 15-minute order block. It could tap into this 15-minute order block. We don't know. We're still watching. I'm interested. So that's why I'm just watching. Right? There's 2 scenarios in this case. It could after the liquidity sweep, it could have a strong V-shaped reaction here and bounce off, or it could continue to go down and then tap this order block and bounce off, or continue to go straight down and hit the New York low. So those are the scenarios. I'm watching. I'm interested. Boom. We tapped into the order block, guys. See, we got a V-shaped reaction. There you go. I'm interested now. We got a V-shaped reaction. You guys see that? See what I mean? So we filled that 15-minute fair value gap. However, it wasn't satisfied yet, and it rejected from that 15-minute order block. You see that? Liquidity sweep, reaction within the 15-minute fair value gap with a tap in the order block. I think this is going to be setting up to be a banger trade, guys. An A+ setup. Look, we already have our change in the state. I see that right away. Actually, it hasn't even closed yet, I don't think. And we got our inversion for value gap here. See this bearish candle get run through? This bearish candle get run through by these bullish candles, right? See if that bullish candle closes. Yeah, it did. It closed, right? It closed. So, guys, this right here, guys, we got a banger setup. Banger setup. So this fair value gap bearish gets inversed by this, meaning there's a change in order flow from bearish to bullish, backed up by this tap in this order block, right? This liquidity sweep took up money from this liquidity. Let me label that. Took up money from this liquidity sweep. This was London low and external. Two types of liquidity sweeps. Took up money, gained some strength, went down even more, tapped into this order block right here, and boom, up we go. This is going to be a rocket ship, I think. I don't know how high it's going to go, but we'll see. Right? So we got a change in the state. I'm going to enter a position here. It's going to be a long position. My target, guys, this is important. The first target I go to is you look for a big 5-minute fair value gap. Boom, we have one right here. So that's our first target, 20 points. But because that's too close, I'm gonna use that as guys, as a break-even zone, because I feel like we can even go up higher. So I'm gonna target this. That's my target, and this zone over here, beginning of that fair value gap, that is gonna be my break-even. That's where I'm gonna put my break-even. Even if I lose, right? At least that break-even. Right? It's a free trade. So this is the 5-minute fair value gap that I was saying. For 5-minute fair value gap, let me label that. Five-minute fair value gap. Okay, break-even zone. This break-even zone over here, 100%, guys. We're gonna hit that 100% for an easy 20 points, right? If we want, but not in this case. I feel like the setup is so good that's gonna fly even more. it's gonna take off all the way to this high, or even take out these highs. New York high, I don't know, we'll see. But we're gonna be careful because heading into 6 a.m. right, we're heading into 6 a.m. So this is gonna be a risky trade. Remember I said don't trade between 6 a.m. to 7 a.m. but we have this banger set up right before 6 a.m. so there's a good chance we're gonna hit something. Okay, let's play it out. You go to orders. I'm quite confident with this trade, so I'm gonna do 15 contracts. This is just simulated, right? Whatever. 15 NQ contract, mini contract, so 14,000 for about almost a 50-point trade. Remember, your stop loss ideally below the liquidity sweep. However, guys, it's way too close, so stop loss right below the low point for the safe. To make it safe, right? Below the low point. Normally I just put it below the liquidity sweep, but the liquidity sweep was way too high. So let's see how this plays out. I don't know if we're actually gonna get tapped into that our order again. It might just shoot up, and that's okay, guys. That's okay. That's a free trade. Oh, we did. So we got our order. Bang. Break even, guys. What do I mean by break even? What do I mean by break even? Meaning you move your stop here, so even if price goes down, you have a little win, right? Or you can close here too. Like, doesn't matter. You can close here. But I like to I'm very confident where price is gonna go, and the feeling that you get with the confidence that you get when price hits your target, that's the best feeling in the world. Speed it up a bit. Boom, guys, banger setup. That's A+. So it decided to keep going up until the New York high over here took that out. Okay, so that's a bullish setup right there. That's a banger bullish setup. Let me recap that so you guys really understand. So you guys really understand what happened there. So I started to see some sort of, I looked for reasons why price was going down, right? Because there was if you looked into the if you look in the higher time frame, because higher time frame tells you a lot of story. Higher time frame tells you stories, guys. So in the higher time frame, if you look, there was Asia low and there was this external low that price was heading to, that wanted to take out. And on top of that, this Asia low and external low, Asia low and this internal because this is the external range in this higher time frame. This internal low and this Asia low got swept. At the same time, it was within this higher time frame 15-minute fair value gap, right? Higher time frame 15-minute fair value gap. And then it wasn't happy, so I also noticed that there was an order block here, guys. Order block. Why is that an order block? Look at the series of green candles, fair value gaps. Okay, that's a strong order block, right? So when you had that tap into the higher time fair value gap on top of an order block with a liquidity sweep of a Asia session, or of a session liquidity, or an internal liquidity, guys, that's like a rocket ship. This is your A++ setup right here, guys. Silver platter. People pay $5,000 to take a course just to know how to use this kind of setups. Okay, learn it, guys. This is your model for life. This is your model for life. Promise you. Look at that beauty. Anyways, enough yapping. Yeah, we swept this liquidity. We tapped into this order block. On top of that, we were within the higher time frame for value gap. Sorry, it looks like a mess right now, I know. Shucks. Within the higher time frame for value gap, we had a strong V-shaped reaction, right? So is a 2 minute. If you go in the 1 minute, we get our inverse for value gap over here. Okay, inversion for value gap. We have our change in the state over here. We entered, at the retest of that change in the state. But remember what I said, sometimes price enters as a retaps into that inverse fair value gap as well. Sometimes it doesn't. So that's what price did, tapped into the IFVG. We got our order hit, and then price took off like a rocket ship, guys. Boom. That's an A+ setup right there. That's it for this video. Next video, we're gonna go over bearish scenarios, so videos aren't too low. I know you're sometimes videos can be too long. There's like so much information to cover, but I hope this made sense, guys. This is your A+ golden one trade a day kind of thing that you want to be looking for. Okay, keep practicing this on FX replay, back test it over and over again. New York session. Okay.